So, coming. So, I'm coming. I'm trying to bring up something. I'm trying to find a way to simplify this thing for all of us. I'm trying to think of how to simplify this in a very, very simple way. So it will be easy for everybody to implement. Some of you guys already understood structure like well, but a lot of you guys don't know what you are even doing yet. Okay. I think there was a time that I explained ranges, right? Hello, guys.
Yes. 2 times.
That I explained strong high, weak low, impulse, retracement, blah, blah, blah.
Exactly.
Okay. So I'm trying to think of a way that we used to break it down so that we'll be saying the same thing, but it's not actually coming. They're not bringing it in. And it's because it's been a while I've had session. So this is what I would do. Let's actually talk about what is it called? Let's talk about the fair value gap reclaimed and the trading template. So whenever they bring down one, I want to find a very simpler way to break it down. I thought of something before, but I've forgotten again. So maybe when I'm actually explaining the FVG thing, I'll be able to, they will bring it back again. They will proceed. So, but for now, let me go back to what I said I'll be teaching you guys actually today. They will bring it actually. Am I for? They will bring it. I'm coming, guys. Am I sharing my screen? Guys, am I sharing my screen?
Not yet.
Okay. Okay, the top-down analysis.
Sorry,
Sorry,
before you start, there's something I want to ask you.
Okay.
Sorry. There's this, there's this image I noticed you used to post on Twitter.
Okay.
But there was a time you were asking about like the whole overview map of the image has inducement in it. It has everything inside it. So I don't know, but if most of us can get that image, it would be much more easier for us. I don't know if it makes sense.
Do you know the image?
I'll need to check for it. Then I'll
be able to
it.
use the image to explain it, ba?
Yes, but you've posted it several times on Twitter, long time ago, talking about it. So,
okay, can you get us the image so I can know the exact one you're talking about? You understand the image or you don't?
I don't understand the image because I don't understand the image. I always fall into the trap of inducement every time. So, but you always talk about it, how to avoid that trap of inducement. But it's like it looks like a SMC image, this popular smart money concept image. That's how it looks like. The image looks like.
Try to bring it up for us, then we'll know what's up.
Okay.
So let's go to the fair value gap creation and reclaim trading templates. It's going to like really help you a lot. Like I used to say something for you guys. But it's until I overemphasize something, that's when you guys pay attention to it. Even though you understand ranges, like I've explained, you have to have, your model has to have the variables. And what that means is you have to have do and don't in everything that you do. You have to have do and don't. I will be going back to the chart. I really want to come back to my normal mood because I'm still feeling dull. So you'll be having do and don't actually. So now let's start from, let me draw out the trading range, the one I actually explained to you guys before. Let me draw it out. Let me draw it out. I actually explained we have where market is going, high, low, high, low, high, low, high. Then we have okay, let me use the inducement trading range as an example. Then we have the trap, then this, which is a break of structure up, a break of structure down. So this is this. So now, let me now explain the concept of FVG creation and mitigation, and how it can actually kind of play with your head if you are not careful. It can really, really play with your head. I'm coming. Screenshot. I'm coming, guys.
Guys, please off your camera.
They won't listen. I don't understand why. So this same diagram now, what a lot of people will be expecting now is market will come back here, then you will sell off from here. That is the simple thing everybody expects. But now let me redraw this. You have a high, a low, a high, a low. Why am I drawing like this? High, low, high, low, high, low, high. Then you have your trap. Then you have your this. Boom, boom, boom. Mitigation. Then you have your this. Break of structure to the upside, break of structure to the downside. Now, remember, I said, don't ever trade from what? Nah, this is not, I don't trade stuff like this. I don't trade this. This is even part of the thing I'll be explaining now. You see this place that they bought from, it is a trap. Don't try to buy from that kind of level. Only for some certain reason. No, this is not me. Or is this what you are referring to that I used to talk about? No, be maybe this. Oh. No, this is just basic stuff now. This is just higher highs and higher lows.
This is not you that posted this image, but
No. This is what you can see on YouTube.
okay, if I find, but I don't think it contains inducement. Okay.
So now, this is part of the thing I want to explain now. Look at this. The overall diagram looks like this. But everybody wants to sell from here. After you have this guy, inducement, break of structure. Now imagine that this is the scenario now. What is the difference between this scenario? This scenario looks like this. If you go to higher time frame, this is what you are most likely to be seeing. You'll be seeing this POI right here, right now. But the question now is, let's now bring this thing out. I want you to follow me. If we bring this thing out, this is what we will have. Will you want to trade this? Absolutely, we would all have taught you guys. The answer is no. But overall diagram, this is a protected eye. So which means, based on the overall diagram, it is telling you to sell. But based on where the sell is supposed to come from, it is a wrong point. So what are you going to do? So that's why the concept of variables and mitigation and FVG creation and mitigation comes in. Now imagine this. When you have, not even imagine, this is most likely what used to happen. Now you have this high, low, high, low, high, low, high. You have your trap. Then now you have high. You have your low. The markets come here now. So after coming here, then the next thing is, let's say you have this. Now, break of structure up, break of structure down. So what is the concept of what is it called? Your fair value gap creation comes in now. In this point, it is a protected eye. but there is no creation of a fair value gap as a result of an incomplete pullback there. So which means in this second one now, this is the creation right here. Now, let's not say the market come back here. Follow me on. Come back here. Did not do this break and retest right here. And it dropped. What do you have again? Fair value gap creation. Another one. Now, let's not say the markets come. Remember, this guy, we have this break of structure. So which means this point is nothing. So now we have this again. We have this. Now we have point 1, point 2. So as a trader now, you are confused because market has created a fair value gap here. It has created a fair value gap here. So now in this type of scenario, there are a lot of things that is most likely to happen. A lot of things. Because now, hey, can you guys see my screen? Can you guys see my screen?
Yes.
So now, in
Yes.
this scenario now, you might feel like, okay, this is my guy that you are expecting. But if markets come here, this is the first point I'll be looking to sell from. Number 1. This is the way I'll be looking to exercise my entry from first. But, which is what you guys will understand because this guy is an external liquidity and this guy is a volume violation. Have I explained what volume violation is?
No, sir.
No, sir. No, sir.
No, boss.
Volume violation is this. Is a type of a breaker, but it is more effective than a breaker, which is a normal typical breaker is when you have something like this. So this is what they call breaker block or violation block. No, this is violation block, sorry. And this is violation block, VR, as a result of the manipulation of this guy. But your breaker block is this one. When you have another block here, and the market buy and it come, then this one is actually a breaker block. Abi? Or some people call it a reclaim block. Abi?
Yes.
Yes.
But we'll be looking at the reaction here too, as a result of a base. That is where we are going to be picking this sell from. So now, my own, which is the volume violation, is this. When you have a high, low, high, low, high, a breaker block will always have a base based on the theory. But there is one that is much more effective that market will just come. You will not see any base. It will just print mad volume from the beginning like this and break it back down. Mad volume, no single retracement around this demand. Once that happens, what am I going to do? I don't even need to be looking for any breaker. I'm just going to put a straight line here. Once I put my straight line, now we have another break of structure here. Now market will pull back to this one first, break back down, creating what? A FVG here. Then I can bet it 90% to 95%. When markets get here, it will never fail. It's different from the one that has a drop-based drop. Drop-based drop. No, this one does not have any base. It disrespected this structure by printing a massive volume there, probably as a result of a news or as a result of whatsoever you want to call it. Even though it does not have a inducement, but it broke two structures as a result of that volume. Whenever markets get there, it would sell. It would sell 90% of the time. 99, I swear 95, it will sell. It will sell. So now, that is where this guy comes in. Remember, this guy right here, this is the drop, base, and the drop. But there's something that market would love to do. This is our fair value gap here, 1, 2. So a lot of people will be waiting for this guy for them to sell. But what the market will do is, market will most likely not to get to this sell. It will come to this volume violation exactly after this manipulation, then it will sell. But what I'm not trying to explain is, what if it did not sell? Which is very, very rare. If it did not sell, what do you think the market will do? The market will now reclaim the FVG, which means market will do something like this. Probably something like this. Then come above it. But what will you be thinking? You'll be thinking this is an SNR liquidity. Market has to come here and buy. But the fact that this guy disrespected my rule of the volume violation, I am not going to be waiting for this order flow. I am going to be waiting for this guy and buy exactly from that price action that disrespected it, because I know this base will never play out. And why would this base play out? This base is as a result of what? A particular break and retest right here. So which is why it will not hold, even though it is a violation block for this guy. I want you guys to listen again. We have a high, low, high, low, high, low, high. Now, this is a violation block now. Now, let me now withdraw it. We have a high, low, high, low, high, low, high. Then you now have something like this. Then you have your violation block. No, sorry. Hey, high, low, high, low, high, low, high. Then you have something like this. Then the market did something like this. I'm coming now. I'm trying to get the drawing. This is the overall demand. Go, 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 go. The market come from here, pull back inside, then sell off. No, this is not what I want to draw. Come back here now. Retrace, then sell off. Remember, this is a low to a high, a low to a high, a low to a high. Why is this one not a high to a low? This is the point of the break of structure. But this market did not pull back inside the range, which makes this place, it is not a swing. Let me come back again. A valid swing has to do this. Break of structure. Come inside that break of structure range. Rally again. Come inside it. Rally again. Come inside it. Rally again. Not this. Not this. These guys, they are not structured. So, it has come. If you want to get your structure point, this is how you'll be seeing it online. I can say higher highs, higher low, higher highs. Nah. Whenever you are trying to get your overall structure without trying to go too far, draw your point of break of structure. Anything that makes it break inside it and a new order flow is already starting up, you can even ignore other rules. So far, it has pulled back inside that range, then you are good to go. But look at this one here. It did not pull back inside the range. So which means this guy is still our high. So this point is our last point of demand. So this is a draw-based drop. And what is the rule of a draw-based drop? Is that sell from there when markets come back there, because it is a violation block. But this guy is not a valid violation block. Why? Because number one, we have a microstructure here. And this point is as a result of a mitigation of the breaker of the microstructure, which means there's a lot of liquidity sitting down above this high. So even if this guy hold, it is just creating liquidity for market to clear all of them, they give you the real sell. So these things right here is a FVG creation. So that is why I said, coming back to this guy here, so I will be buying here. Why? Because I know this sell will never hold. So I will buy to this sell now. Take my TP, then I can now overall my sell to this guy. Why do you think I will not consider all these break of structures? Why? It's because after this guy created a low, this one pull back inside. Who? This one, did he pull back inside here? No, it is not a structure point. So this one that come after it too, they are just liquidity creation. But we know that this one is not going to hold. It is like a trap for people that are advanced but not advanced enough. So the market is going to come here. So, but if market decide to use the fair value gap B, which is right here, this fair value gap, which is right here, which is the second fair value gap, if the market decides to use this one, it will create a new low and a new cycle have started. I'm not going to think now, because market has created a new low and market still have to come all the way here before I sell. Nah, I'm not going to predict that. I am still going to be following my order flow, which is market would always give you something. You just have to see it as a trader. Market will come here, the same thing, cycle will start again. Probably do something like this again, then create a new low. Another fair value gap creation right here. But if it did not do that, what do you think it's going to do? It's just going to come high, low, high, low, high. Then it's going to break your structure. Then market can come back here, reclaim it, and sell. So which means it's not going to give you the pullback immediately. It's going to break the old structure before giving you the pullback. So for the concept of a fair value gap creation, you need to understand it with order flow. And every past price action would actually help you a lot. What do I mean by that? Let's say we have this as a result of a past price action. This is our past price action. No? Boom, we have this supply. They did not mitigate it. We have this now. Let's say this is just past. Market has been doing this order flow. So now, this is a past price action right here. This one is a past price action too right here. So let's now assume the market has changed bias now. We are now bullish. So anything that makes markets come here, I'm coming now. Then we go here now, high, low, high, low. You take out of this one. How am I going to get this drawing now? Then we come here, reacted as a result of whatever it is, then go back up, pull back, not to it, then rally up. Taking out this previous order flow here. What does that mean? You might be thinking market needs to come here. It will not come there. Why? Because this guy is a result of a violation of this order flow, and we already created a FVG there for you. So which means market will come, fill the FVG and buy. You will miss out on this one that you are expecting. Market cannot get to this one and decide to use it and come here, but based on that rule, they would not just ignore this guy. Because number one, this is a violation block. Number two, this is a break and retest, giving you a creation of a fair value gap. So this is where you should be picking your continuation from. Why? Not just because this is a fair value gap, just because the creation of the fair value gap is as a result of what? A violation block, a violation of a particular order flow. Now, compare it to this now. When you have market come here, high, low, the market create this. Then you have, after I did this, then when it break this structure now, you now expect price to come like this and buy. This is so kind of unprofessional for you to do. Very, very unprofessional. Even if you think you want to use the ABC word and do like this, it's still wrong. Because they did not create the fair value gap there. So for them to create it, they need to create a range. Which is, as you all know, make all this one feel their rights, break structure for them, break them out, retrace it back. So this is your FVG, week to week. Then they'll come back here and buy. Ignoring whatsoever POI that you're looking out for around here. In as much as you care about the future, don't joke about the past. That's one thing you need to know. In as much as you care about the future, don't joke about the past. But the only time that you should be focusing more on FVG is after a hunt. FVG is useless if there is no hunt before the creation of it. That's why I said stop hunts leading to the creation of FVG and reclaiming it. So now let's not say market ignores this guy and you fail this sell. What do you think the market will do? It will react back and it's going to sell off. What do you think he did again? The same rule. This guy is not a violation block. Don't think it is because of what I explained here. It's not a violation block because we have an internal range here. So which means we have a FVG here. So market will come to this FVG and that's where it's going to sell from. Ignoring this your violation block that is fake. So they cannot shank it twice. So this is the reclaiming of it. That is if they ignored it in the first place. So which means you would immediately position yourself to the opposite bias and you will take your money back with much more profit. Okay? So, but it has to happen after a hunt. After a hunt. So which is when you cannot just be expecting market to do this, high, low, high, low, high, a regular break of structure now. And you're not looking for one kind of FVG around here and say you want to sell from it now. Where is the hunt? Where is the money? Nowhere. So, but it's a different scenario when you have markets coming like this. High, low, high, low, high. Then you have your so-called whatever. Then market come, hunt it, come like this, react, hunt it. Once it hunts it like this, then this guy can actually create a kind of a support, then break it back down. So this support area, boom. So now, so after that, if it's either it comes to this support, boom, or you, if it do this, I can pick my trade from the support, but that would be a risky thing because I can be expecting this to be buying to the upside. So, but what I'll be expecting in reality is I'll be expecting something like this. Mitigation of this one here, coming back down, which will lead to what? FVG, week to week. Then I would, boom, sell from here. But if that did not happen, it's either I also have a break of structure fully here, then I can really now sell from here. So this guy right here is now what's going to lead me to me explaining one confluence for you that would also help you. And what is that confluence? That is a confluence of key level. Some people actually use round number, but the question now is it all round number that you are going to be trading? Nah. There are some round number in a particular range that is useless. Okay, let me break that down. I'm already moving to another thing entirely. So now, I'll be using everything together now. Let's say you have market doing like this now. So now, and now we have a round number right here. A round number right here. Come in, a round number right here. Then we have a round number and come in. You have a round number right here. The same round number, double zeros. Double zeros. Double zeros. And you have another one right here. Now, looking at all this whole round number now, if somebody tell you that you should be trading round number, if you are trading this round number right here, you will have short loss. If you are trading it right here to sell, you will have short loss. If you are trading it right here, you will have short loss. But if you took it here, you will win. So what does that mean? Not all round number is tradable. But what is going to validate if it is tradable is as a result of a past price action. So which means, does round number really matters? The answer is absolutely no. When you can literally see where the market is respecting too much. I want to come again. What is the point of a round number when it is not being respected? That means it is not valuable. But the only thing is, the only why we look at it is when it is respected. So which means, do we even need the round number before we know our key level? No, we don't. So that is where this type of rule comes from. Now, looking at this pattern right here now, if you look at this price action, and they tell you to tell me what your key level is, I will tell you that this is my key level. This level, 1. And my second key level will be where? This level, 2. Why? Market respected this guy, respected this guy, respected this guy, and moved. This one too, market respected this guy, respected this guy. That will be my major key level. And they are responsible for major swing. When they come here, he sell. When they come here, he buy massively. When they come here, he buy massively. So which is, if I want to sell, my confluence for this entry is not just going to be as a result of, just wait. It's not just going to be as a result of, market, this guy is just another block. I will look at the past and feel like, okay, is there a psychological level confluencing this guy? So there's not 2 ways to use it. Some people just use the key level or round number, and they use it with what? Trend line. What do I mean by they use it with trend line? Now, once they get their normal analysis, but they want to be sure that, okay, is there any other confluences that will tell me I am right? So what would they do in that instance? This is what they would do. After plotting their key level, which is the confluence 1, check. They might now look at this price and be like, okay, if I plot a particular trend line, will it connect and lead and link to this guy? So now let's look for one. If I connect this guy to this guy, to this guy, no, sorry, let me make it straight. This guy to this guy to this guy. Oh, I want me straight. Can you motivate forward share? This guy to this guy to this guy to this guy, it will lead to this guy. Look at this. This line respected, 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 respected. Now, when price now gets here, connecting your normal order flow with it, connecting your key level with it, and your trend line, you have like 4 confluences already. So then you see a sell. So that's when you will see that some SMC trader, they would have their order flow, normal. But you still see some trend line on their charts. It's not because of the fact that they are picking that trade from that trend line, but they are trying to connect other confluences. Retail, they call it like retail as extra confluence. So now, let's go to another example now. Looking at this one now, looking at this past price action, I can say this guy is a confluence for me. From this guy to this guy to this guy to this guy to this guy. Connected, 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 then connected as my entry. And I can look for another thing. This trend line connect to this one, connect to this one, connect to this one, and also connect here. Or I can say this guy to this guy to this guy, connect here. Are you guys even understanding me, Seth? We are still going to go to the chart too.
Most of those, mostly.
Are you guys understanding what I'm saying, Seth?
Yes, boss. Yes, boss. Carry on.
So,
Chimo.
Oh,
sorry.
obìnrin ló sọ̀rọ̀ tó ń sìn ẹ́ o. So now let's go to the chart now. Let's use the chart as an example of everything that I've been explaining so far. Well, this one will soon finish. Oh. Okay, we'll still have to come again. So now, let's use this as an example. Now, what the price did here, this is a stop hunt. Markets hunt this guy because he broke structure right here, then they stay hunting. So after hunting it, market broke structure. So breaking structure now, let's look for our confluences. Apart from the fact that we have this guy being responsible for this high. So this guy is our violation block. Am I right? Huh? Apart
Yeah,
from
you're right.
that,
Yes.
what
Yes. Yes.
other variables do you think I can connect here? I can connect this. Does it make sense?
Sharp. Yes.